What's up, guys? So today we'll be doing financial position statement as well as your asset disposal. So question 2.1, choose an explanation in column B that matches the term in column A. Write only a letter next to the question. So 2.1, guys, you are given internal auditor. 2.1.2, MOI, which is memorandum of incorporation, limited liabilities director, as well as your companies and intellectual property commission. So the answer for 2.1.1, it's going to be, since it's internal auditor, our answer is going to be C. Yes, because internal auditor are employed by the company to ensure good internal control procedures. And then the answer for 2.1.2, memorandum of incorporation, it's a document, so it's E. So the document that establish the rules and procedures of a company. And then 1.1.3, limited liabilities, our answer it's going to be D, which is indicates that a company has a legal personality of its own, right? So limited liability. Remember, guys, the financial affairs must be separately disclosed between the company as well as the shareholder. That is why stated that it indicates that a company has a legal personality on its own. However, 2.1.4, the answer for 2.1.4, it's going to be A, right? Remember, the directors are appointed by the shareholders to manage the company. And then as for 2.1.5, our answer it's going to be B. Yes, so it's going to be B, which is the body responsible for registration for all companies. So you have the match, column A and column B, and then we move on. So the financial year ends on 28 February 2019. Amounts for, so you need to calculate the amounts denoted I, which is Roman figure 1 and Roman figure 2 in the fixed assets. So Roman figure 1, guys, Roman figure 1, you need to calculate the depreciation of your asset disposal. Hence, information A, you are given a delivery vehicle was sold on 31st October 2018, but no entries were made to record this transaction. However, you are given the fixed asset register. Date purchased was 1 March 2016. Date sold was 31st October 2018. And then we also have the depreciation rate, which is 25% using diminishing balance method. So again, remember our diminishing balance method, the formula it's going to be cost, right, minus accumulated depreciation, and then is equals to what? Our carrying value. You are given the cost of 400,000, right, and then you minus so our accumulated depreciation will be our depreciation for the first year, which is 100,000, right, plus, so basically it's this 100,000, and then you add 75,000, so it's plus 75,000, meaning our accumulated depreciation is going to be 175,000. So 400,000 subtract your 175,000, it's going to be 225,000. Now that we have our carrying value of 225,000, we are given the rate of depreciation, it is 25%, so you multiply by 25 over 100, right? So this asset was sold on 31st October 2018, right? So meaning at the beginning of our counting period, which is 1 March, right, 2018, up until the date whereby you sold the vehicle. So from March to October, meaning this asset it's for 8 months, right? So meaning you will multiply by 8 over 12. Therefore the value of our depreciation for asset disposal, it's going to be 37,500. So we have our Roman figure 1, which is depreciation on asset disposal. Therefore Roman figure 2, right? All right, so our answer for Roman figure 1, remember, it is 37,500, right? So now we need to calculate our carrying value, guys. The formula for carrying value always, it is cost and then you minus your accumulated depreciation, therefore you will get your carrying value. Our cost, because of you are using a historical cost concept, the cost is always fixed. Now our accumulated depreciation must also include this depreciation of our asset disposal. So meaning, since we have 175 as our accumulated depreciation, it's going to be 175,000, right? This accumulated depreciation excludes your depreciation of your asset disposal, hence we need to add back that 37,500, right? And then when we add the two, our answer is going to be 212,500, meaning it's the value of our accumulated depreciation. Therefore our answer for carrying value, it's going to be 187,500. So the value of our carrying value or book value, it's going to be 187,500. Therefore now we need to calculate our what you call our profit. Yes, it's either our profit or loss on sale of asset. Remember guys, it's not every time when you sell or sold an asset you are going to have a profit. It's either a profit or a loss. So to make things easier, it's going to be cost, right? And then accumulated depreciation, and then depreciation, guys. So accumulated depreciation, it's accumulated depreciation of an asset disposal, and then you have your carrying value, right? You compare your carrying value with your selling price, right? And then to get whether you made a profit or a loss. So accumulated depreciation, it's in brackets, depreciation, it's in brackets, right? And then selling price, remember selling price, it's a disposal. It's whereby in basic English, guys, disposal, you are eliminating an asset, but because of we are doing accounting, and accounting, it's all about finances. So disposal in accounting, it's whereby you sell an asset. Therefore the cost is given as, remember our cost, it was 400,000, and then our accumulated depreciation was what, 175,000, right? And then our what you call our depreciation, yes, our depreciation was 37,500. So meaning our carrying value for asset disposal that is left, it's going to be, when you take 400,000 minus 175,000, subtract that 37,200, our carrying value, it's going to be yes, it is our carrying value, which is 187,500, right? Remember our answer for Roman figure 2 will be our carrying value when we calculate our profit or loss on sale of asset. So guys, selling price, it's given as 195,000 cash, so meaning our selling price, it's 195,000. So now if your selling price, it's greater than your carrying value, you have made a profit. I repeat again, if your selling price, it's greater than your carrying value, meaning you have made a profit on behalf of your asset disposal. So as you can see, we have our selling price that is greater to our carrying value. So meaning this asset we have made a what, a profit of. So it's going to be 187,500 minus 195,000. So meaning we have made a profit of 7,500. So we have made a profit, right? So it's easy when you do this method, guys. You just compare your carrying value as well as your selling price. So if your selling price, it's less, if your selling price, it's less to your carrying value, you have made a loss, right? So it's a two-way stream, guys. Now because of we made a profit, yes, we've made a profit, it's because our selling price, it's greater than our carrying value. So we have the following questions. So 2.2.2, calculate the correct net profit after tax for the year ended 28 February 2019 indicates a plus for increase and a minus for decrease. So guys, remember to indicate for minus, you can do brackets. So bracket stands for subtraction in accounting. So we are given the incorrect profit before the tax, which was 822,700. So guys, there are amounts included in this 822,000 and there are amounts excluded in 822,700. That is why it said calculate the correct profit. Now we move. Information C, you are given the provision for bad debts must be increased by 65,000. So whenever your provision for bad debts, so you have provision for bad debts. So guys, remember, provision for bad debts, when your provision for bad debts increases, it's an expense. So expenses are in brackets, so you will put 65,000 in brackets or a sign of subtraction. So yeah, and then 9,800 of advertising contracts applies for the next financial year. So this will be your what, your prepaid expense, right? Because of, guys, your advertising, it's a prepaid expense. Prepaid expense are receivables. That is why it is recorded on note number 5, right? So meaning the advertising contract, that 9,800 will be receivable. It's either this year or next financial year. That is why we said advertising will be recorded as an prepaid expense on note number 5. So meaning that 9,800 will be positive, right? Because it's a receivable. And then a tenant paid the rent of 334,000 for the period 1 March to 31st March, right? So this, it's for 13 months, right? March to March, it's 13 months. However, the rent was decreased by 3,000 per month from 3,000 per month from 1st January 2019. So I think I need a space for this. Yeah, I will do the calculation here. So you have rent. Remember, our rent was 334,000, right? And then it's for 13 months, right? And then the adjustment said that an increase of 3,000 with an effect from 1st January 2019, right? So from January up until 31st March 2019, which is our rent increased only for 3 months, right? So our calculation, it's going to be 3,000 multiplied by 3, and then it's going to be, let me do my calculator, guys. Yes, so it's 3,000, right? And then times 3, so meaning we will have 9,000. Hey, maths, ne? So 9,000, it's rent after increase. So that 334,000 consists of your two rents. So you have rent before increment and rent before, it's rent before increase and rent after increase. So you will take your 334,000 and then you subtract your 3,000, your 9,000. Yes, so it's 334,000, right, minus 9,000. So you will get 325,000. So the rent was 325,000 before an increase of 9,000, right? So again, that 325,000 still, it's for 13 months. So you divide by 13 to see the rent paid monthly, which is amounted to what? 25,000. So meaning per month this person was paying 25,000 before increase of 3,000. So because of that 25,000, it's rent before, right? Remember, our rent consists of what? Before and after. So per month our rent was 25,000, and then we were told that you have an increment of 3,000 per month, so you need to add that 3,000, right? So meaning our rent, it's going to be 28,000. Our final answer, it's going to be what? 28,000. So remember, guys, the rent was received in advance, right? Therefore, since the rent was received in advance, so you will have rent income, right? Yes, as our rent received in advance. So another calculation, you can say 334,000, right? And then you subtract 9,000, and then remember we said divide by 13, so meaning you will have a negative sign of 28,000. The reason why you have a negative sign, it's because it's a deferred income. It's an income received in advance, so it's payable. However, depreciation and profit on the vehicle must be recorded. Guys, remember we also had a profit, right, on sale of asset, right? We had a profit of 7,000 profit on sale of asset. Remember our profit, guys, from 2.1.2 was 7,500, right? So it's a profit, it's an income. And then we also calculated our depreciation on behalf of asset disposal, which is amounted to 37,500. Depreciation, it's an expense, so it's in brackets. And then a further 43,000 is owed for income tax, so meaning you will have income tax here, right? Income tax. So since they said it is owed, you are given a provisional tax payment of 155,000, right? Because of it's owed, yes, it's owed for income tax, you will add that 43,000, so meaning our income tax, it's going to be 198, yes, 198,000. Then we have our income tax of 198,000. So to calculate correct net profit after tax, you'll do the following calculations, guys, meaning our profit after tax will amount to 511,500. Yes, so we have our net profit of 511,500. Right, so let's move to our retained income. We are given information D, right, which is your ordinary shares. Right, guys, remember our net profit, right, net profit after tax was 511,500, right? And then here it's going to be your buyback of shares, and then interim ordinary share dividends consist of interim dividends as well as your final dividends. So when we check our information C, you have 360,000 shares were repurchased at 4 rand 10 cent each. So we need to calculate our average price. So guys, remember that 4 rand 10 cents, you have average price and then you have above average. So to calculate our average price, the formula, it's going to be value of shares divided by number of shares. So our value of shares was, at the beginning, our value was 7,600,000, right? And then the number of shares was 2 million, right? So meaning our average price, it's going to be price, it's 3 rand 80 cents. So now because of we have our average price of 3 rand 80, now our above, it's going to be 4 rand 10 cent minus 380. So our calculation for buyback of shares, it's going to be 360,000, right? You multiply by open brackets 410 minus 380. So meaning the value of shares repurchased under retained income, it's going to be 108,000. So 108,000 is our buyback. And then interim dividend were paid in September. It's given as 295,200. So our interim, it's 295,200. Therefore, as for final dividend, stated that final dividend of 20 cents per share were declared on 28 February 2019. So as you can see, we are given our shares at the end, which is amounted to 2,440,000. So meaning for final dividend, we will take 2,440,000 and then you multiply by 20 cents. So meaning our final dividend, it's going to be 488,000. When you add the two to get total dividends, interim plus final, you will have 783,200. Therefore, our closing balance for retained income, it's going to be 485,600, right? So it's 485,600. So we have our retained income, and then we move to our statement of financial position, which is your balance sheet, right? So guys, remember, you copy and paste first thing our retained income, right? So you have retained, so here it's retained income. Our balance at the end, it was 485,600, right? And then you need to add your ordinary share capital plus your retained income. So when you add these two amounts, right, you will get 8 million, right? 637,600, yes. So it's 8,637,500. And then you move here, current liabilities, it's going to be trade. So I'll write trade payables, guys, because of the space, right? And then you have, it's either you can say final or you can say shareholders, right? So it's shareholders for dividends, right? Remember, our shareholders for dividends, it's under retained income. Therefore, our shareholders for dividends was this 488,000. So meaning you will bring it here under current liabilities, which is 488,000. And then you also have non-current liabilities, which is consist of your loan only. So here, okay, current portion of loan, it's given. Remember guys, you had SARS that was owed, right? When we were calculating the profit after tax, right, our SARS owed was 43,000. So this 43,000 will be recorded under current liabilities. So meaning you will record 43,000 as our current liabilities. And then we move current assets. So you have inventories, and then you have your trade, right, receivables. So you have your trade receivables, and then you have cash and cash equivalents. So guys, let us start with our balances given unto us. So we have ordinary share capital, it's completed, and then we have retained income completed. You have your balance on loan, which was 1,758,000. So we have our balance of open brackets 1,758,000. This is the opening balance. And then we move to a fixed asset at carrying value. So you have fixed asset at carrying value, right? So our fixed asset at carrying value amounted to 10 million. Yes, so it's 10,190,000, right? And then we have our fixed deposit as a balancing figure. We have trading stock also as a balancing figure, and then we have our net trade debtors, yes, priority net trade debtors, which was our net trade debtors will be recorded under trade receivables, right? Again, open brackets 1,090,000, right? And then next balance, it's going to be SARS, it's sorted. Creditors control, nice. So creditors control was 1,906,800, right? So meaning our trade payables was 1,906,800. So now we have our opening balances, guys. We can settle our adjustments. So First things first, remember we had prepaid expense of 9,800, right, for advertising. So since I stated that 9,800 will be recorded under receivables, so you'll add 9,800, right? And then we have remember our 65,000 for, let me do this calculation here, guys. So I'll write note 5, right? So we have 1,090,000, right, which is balance at the beginning, minus our provision for bad debts. Remember, our provision for bad debts was increased by 65,000, so meaning you will subtract that 65,000 here, so it's minus 65,000, and then you add your what, your prepaid expense of 9,800. Nice. So you have the following adjustment number G. A creditor with a debit balance of 7,600 must be transferred to the debtor's ledger. So basically, guys, you need to cancel a debtor. You need to cancel a creditor to be a debtor. So when you cancel in accounting, the sign of cancellation in accounting, you are going to add that 7,600. So meaning our trade and other receivables total will amount to 1,042,400. So our note number 5, it's going to be 1,042,500. Right, so let us move to our note 9, which is trade and other payables. So again, guys, I will do the calculation here. I will write again note 9. So we had our creditors control of 1,906,800, right? You add that 7,600. Remember, guys, it will affect your receivables as well as your what, your payables. So that is why you cancel this person from being a debtor to a creditor. So you add 7,600, and then again when you check adjustment H, a check for 75,000 dated 30 April 2019 was issued to a supplier. So because of a check was issued to the supplier, so it's more liabilities to us, so we need to add back that 75,000, right? So it's plus 75,000, and then let us check under, so it's right. And again, guys, you are given the following ratios, which is its current ratio, the total liabilities, which is amounted to 2,900,000, the current portion of loan is your balancing figure. So before we proceed to the ratios, remember our rent, guys, our rent income here, it was 28,000, right? So yes, our rent here, it was 28,000. So this rent was income received in advance. So that income received in advance, we will add it back to note 9. So you add 28,000, right? So when you add your payables, it's going to be let me check. So yes, your total payables, it's going to be 2,017,400. Nice. So here it's going to be 2,017,400, right? Now because of, they said that your current portion of loan, it's a balancing figure, so you will take your total current liabilities, subtract payables, subtract your final dividend, and then you minus your SARS income tax. So meaning our current portion of loan, it's going to be 351,600, right? And then here you're going to say minus 351,600. So meaning our loan, excluding the current portion of loan, will amount to 1,406,400, right? So meaning our non-current liabilities will also be 1,406,400. So to get your total equity and liabilities, you take 1 shareholders equity plus 2 non-current liabilities plus 3 current liabilities. When you add the three amounts, you'll get 12,944,000, right? So meaning again our total for our total assets also, it's going to be 12,944,000, right? Nice. So let us move to our assets. So again, when we check Roman figure, when we check information F, the business sells portable generators. However, closing stock of 128 units must be valued using your weighted average method. That's nice. The business bought 2 watches of stock during the year. So as you are given, the following batch was bought on 1 March, the next batch was bought on 2nd of August 2018, right? So because of you are using a weighted average, guys, it's going to be right. Let us go here again. So weighted average, right, it's value of units available to be sold, right? And then you divide by number of units available to be sold, and then you multiply by units, right, at the end. So when we check our value, the first batch was given as 2,700,000. So your calculation, it's going to be 2,700,000, right? And then you add the second batch, which was bought on 2nd August 2018, which amounted to 1,600,000, and then you will add 1,600,000, right? The number of units for batch 1 March 2018 was 300, and then the second one was 200. So you divide by 300 plus 200. The number of units, guys, it's given on the additional information, which is F, closing stock of 128 units. So meaning our units at the end was 128. So meaning the value of closing stock will amount to 1,100,800. So our closing stock will be 1,100,800. So this 1,100,800 will be recorded under inventory. So it's 1,100,000 and then 800, right? Then we have our inventories. So let us move to our non-current assets. Remember, our fixed deposit was a balancing figure. Then our tangible asset, right, our tangible asset balance was amounted to 10 million. Yes, so it's 10,190,000, right? Then you subtract the following. So our depreciation, guys, remember we calculated the depreciation on asset disposal, right, which was at 37,500, right? So you need to subtract your 37,500, right, and then you minus your accumulated depreciation amounted to 187,500. So meaning carrying value at the end will be 9,965,000. Yes, so it's 9,965,000. So you have the two balancing figure, which is your fixed deposit, it's a balancing figure. Your cash and cash equivalent, it's also a balancing figure. But there's a clue, guys. Remember, we have our current ratio, which is 8. It's 0.8 is to 1. Remember, our formula for current ratio, it's current assets is to current liabilities. So now you need to calculate the value of So you need to calculate the value of your current assets given your current liabilities as well as your current ratio, which is 0.8 is to 1. So when you calculate the value of your current asset, guys, you will take current liabilities, right, which is 2,900,000. You just simply multiply by 0.8, right? So meaning your current asset, it's going to be 2 million. So it's 2,320,000. Yes, 2,320,000. Therefore, when you calculate your cash equivalent, you will take your total current assets minus inventories, and then you minus your receivable. So meaning your cash equivalent, it's going to be 176,800, right? And then we move to our non-current assets. So because of we have our total assets now, which is 12,944,000, and then we also have our current assets, so you need to subtract that 12,944,000, then you minus current assets of 2,320,000. So our non-current assets will be 10,624,000. Yeah, 624,000. So meaning our fixed deposit, you will take non-current assets, right, and then you subtract your fixed assets. So the value of your fixed deposit, it's going to be 659,000, right? Yes. So now, guys, you have your financial position statement, which is, it's your paper one, right? So again, let us hope the session was therapeutic. See you soon.